Welcome to Growth Investing Mastery. In this video, we will look at an exciting semiconductor stock in the AI space that I added to my portfolio recently. It's Silicon Motion with symbol SIMO. As a reminder, this is not investment advice or recommendations to buy this stock. The purpose of this video is to deep dive on the semiconductor stock Silicon Motion with symbol SIMO. They're a growth stock with emerging AI sales in enterprise data centers. We'll take a look at a company overview and the growth prospects for this business. Next, we'll take a look at valuation compared to other semiconductors and peers in the space. We'll look at why Silicon Motion and why we may want to buy now. But we'll also take a look at bear cases and potential concerns for the business. There's 4 sources for the content in the video here. It comes from the Q4 2025 earnings call, the UBS Global Technology AI Conference, the Q3 2025 earnings call, and the company's last 20F regulatory filing. I put the dates there as well for these sources if you're looking to track down any of the material. Now let's jump into a company overview for Silicon Motion. They are a fabless semiconductor making NAND flash controllers and storage solutions. And it's a founder-led business that was started in 1995. The founder's name is Chia-Chang Ku, but he also goes by Wallace. And you'll see in a lot of the earnings calls or tech conferences, he's referred to as Wallace. The stock is an ADR based out of Hong Kong and Taiwan, and they did an IPO in 2005. There's about 1,800 employees for the company, mostly in Taiwan, but they also have offices in California. What really makes this company interesting from my perspective is they made a groundbreaking deal signing Nvidia as a customer in Q2 of 2025, as they began to enter the AI space and the enterprise data center space more. Silicon Motion's Mon Titan product is built into Nvidia's DPUs, or data processing units. A DPU is used to offload networking, storage, and security from a CPU or a GPU. And I learned that every Bluefield DPU card that Nvidia creates requires its own boot SSD. And that's where Silicon Motion comes into play with its solution. In Q4, Silicon Motion saw enterprise AI data center sales grow between 125 and 130% quarter over quarter. But still, these AI data center sales make up less than 10% of revenue, so there's a lot of room for growth here. Silicon Motion has an impressive set of customers. In the company's last 20F filing in 2024, Micron made up 19% of sales. That's followed by a company that I think is pronounced Kioxia at 15%. Phi Semi is 13%, and Alpha Store is 10% of sales. The company also had SK Hynix as a top customer in previous years. And it sounds like SK Hynix is still a customer, but not a customer that makes up over 10% of revenue currently. Silicon Motion will have a new regulatory filing at the end of April, so we'll see how these percentages update in a few weeks. It's important to know for this company that memory makers can also create their own controllers. But much of the competition exited the market. And in turn, these NAND memory makers are turning to Silicon Motion to make the controllers. Some of the main markets include client SSD, which is used in laptops and PCs. The company also has products called eMMC and UFS controllers, and they ship these to all Tier 1 Android handset OEMs. That's a whole lot of terminology right there. But the eMMC is an embedded multimedia card. The good news for Silicon Motion is that Samsung exited the market here. So this makes Silicon Motion the clear leader on this product. UFS stands for Universal Flash Storage. Another factor that makes this company really interesting to me is there's a lot of diversification in their products to AR and VR, automotive, drones, gaming platforms, robotics, and smart glasses. Let's now examine the production process for Silicon Motion. This is a rough outline of the fabless production process. The first step is that Silicon Motion designs the chip or controller, and this includes items like the code, architecture, firmware, and the interfaces. Next, Silicon Motion sends the GSD2 files to Taiwan Semiconductor, or SMIC. SMIC is basically the Chinese fab that's equivalent to Taiwan Semiconductor. And GSD files are graphical design systems. They describe the entire technical specification for the product. Next, the fab may outsource assembly and test, or potentially do that themselves. They cut wafers into dies, and the next step is packaging and more testing. Silicon Motion receives the finished controller individual circuits, sometimes called ICs, and then they sell them to NAND manufacturers or module makers like SK Hynix or Micron. The module maker then combines Silicon Motion's controller with NAND flash to make the final product. For Silicon Motion and other semiconductors, it's a challenging technical ramp on products, and we're learning as we go here. But feel free to leave feedback if you have further insights on the technical aspects of this business. Let's check out some of the impressive financials that Silicon Motion is posting. While the company has an exciting narrative, we always want a stock to be backed by financials and strong fundamentals. Looking back at the last 5 quarters of the revenue trend, the quarterly revenue goes from 191 million to 167 to 199 to 242 and then to 279 million in the latest quarter. The year-over-year revenue growth rate for those corresponding quarters goes from -6% to -12%, -6%, then to +14%, and to +46% in the latest quarter. So you can see there was some negative year-over-year growth about a year ago. And we'll discuss some aspects of why that was later in the video. But this latest quarter saw a really impressive jump up, growing 46% year-over-year. Additionally, this latest quarter showed up with strong profitability as well. In Q4 of 2025, the company got 39 million of GAAP EBITDA, 48 million of GAAP net income, and 49% gross margins. All 3 of those metrics there were records over the past year. The company has a market cap of 4.7 billion, cash of 202 million on hand, no debt, and they pay a 1.5% dividend. So this is a business that generates significant cash. They don't have any debt, and they can pay a dividend. Some of the more impressive financial details that I found is how this company has beaten their guidance recently. In Q3 of 2025, the company had previously guided revenue from 219 to 228 million. And this ended up landing at 242 million, beating the guidance by 14 million. In Q4 of 2025, the company had guided revenue from 254 to 266 million. The actual number came in at 279 million, beating the top end of the guidance range by 13 million. But the really big standout for this company with guidance is where they're guiding the next quarter, or for Q1 of 2026. They guided from 292 to 306 million. And this is versus a comparison number of 167 million on the last year. So if the company lands at the top end of their guidance range, it will end up being 83% year-over-year growth. And based on this company's history with beating guidance recently, we expect them to get more than 306 million of revenue. The interesting thing for Silicon Motion's business is historically going from Q4 to Q1, they see a slowdown in sequential revenue. So there is some seasonality to this business typically. Yet now the company says they see revenue up sequentially and counter to the typical seasonality. This was the most important detail I found in the earnings transcript, which explains the acceleration in this company's business. The typical seasonality previously came from the holiday season for phones and laptop purchases. But now that Silicon Motion is selling to Nvidia and the enterprise more, they've overcome the seasonality. One more detail that was even more surprising is they said we believe the first quarter of 2026 revenue will be the lowest of 2026, and expects sequential growth throughout the remainder of the year. I was surprised to see this company has this much confidence that they can definitely get sequential growth for all 4 quarters of 2026. And this is partly because the company has a lot of visibility with their backlog and engagements with customers. Let's now take a look at Silicon Motion's valuation versus other semiconductors. I had in the thumbnail and the title description that this is an undervalued AI stock. I picked 3 other semiconductor stocks that have similar revenue ranges and profitability, but the 4 stocks here each occupy their own niche. I don't believe there's a direct competitor to Silicon Motion besides the NAND memory makers themselves sometimes making controllers. I've put the metrics on the screen for the financials that we care about most. For Silicon Motion, they had revenue of $279 million in the latest quarter, which was up 46% year over year. Gross margins were 49%, EBITDA of $39 million, and net income of $48 million. The market cap is $4.7 billion, and this gives the company a run rate price to sales of 4.2 and a run rate PE of 24.4. And for growth stocks, I typically like to look at the run rate as opposed to the trailing 12 months or the forward-looking 12 months. And this is because the run rate indicates what the company is capable of right now. This price to sales of 4.2 is extremely cheap for a growing semiconductor. And we'll see how cheap that is when we compare to these next 3 companies here. There's a company called SiTime Corporation with symbol SITM. And they make semiconductor timing devices or small clocks that go into semiconductors. SiTime had revenue of $113 million, which was up 66% year over year. And SiTime also had gross margin of 56%. So the revenue growth rate and gross margins for SiTime are higher than Silicon Motion. But the overall revenue number is less than half of what Silicon Motion got in the latest quarter. SiTime had EBITDA of $14 million and net income of $9 million. So the profitability is significantly lower than Silicon Motion. Yet the market cap for SiTime is $11.9 billion, well more than double that of Silicon Motion. And the run rate price to sales for SiTime is 26.3 with a run rate PE of 330.6. The next company we compared to is Nova Limited with symbol NVMI. We used to own this company in early 2025, and they make semiconductor test equipment. Revenue in their latest quarter was $223 million, which was up 14% year over year. So we can see that revenue growth rate is well below Silicon Motion, and they also have a lower overall revenue number. However, gross margin came in at 58%, EBITDA of $68 million, and net income of $65 million. These numbers here are all higher than what Silicon Motion got. But the market cap for Nova is $16.5 billion, or over 3 times that of Silicon Motion. This gives Nova a run rate PS of 18.5 and a run rate PE of 63.5. The 4th company we examined here is Applied Optoelectronics with symbol AAOI. They make optical transceivers. Revenue in the latest quarter was $134 million, which was up 34% year over year. And both the revenue number and the growth rate are significantly lower than that of Silicon Motion. Gross margin came in at 31%, which is the lowest of the 4 companies here. And the company had EBITDA of negative $3 million and net income of negative $2 million. So it's the only company here that hasn't crossed over the profitability threshold yet. The market cap for AAOI is $11.1 billion, and this makes the run rate price to sales of 20.7. But there's no PE ratio here because the company isn't profitable yet. The values for all these metrics came from April 15th, so it's an apples to apples comparison. But each of these semiconductors occupies their own niche. So on that aspect, it's not completely apples to apples on valuation. But when we look at these numbers overall and we see that Silicon Motion has a price to sales of 4.2, it looks really attractive compared to other semiconductors. And if I had to say what I think fair value is for Silicon Motion, it seems like $12 billion would be a reasonable valuation. And that presents quite a lot of upside to the stock when the current market cap is just 4.7 billion. Let's check out some details of the Q4 2025 earnings review. The management said there's strong demand across all our markets, and there's compelling new controllers and solutions. They said they believe Q1 of 2026 will be the lowest revenue quarter of the whole year. And this is keeping in mind Q1 is already guided up sequentially. On the product side, there's new eMMC and UFS controllers. And there's a PCIe client SSD controller that has a new version. Additionally, there's the Mon Titan Enterprise SSD controller, which is the controller that's being sold to Nvidia. There's also expansion in the Ferry automotive portfolio, and they expect broad-based growth here. Ferry is their brand name related to anything automotive. The spelling of the brand name is Ferri. Additionally, the company has expanding market share within their existing market. And the introduction of these new products brings the average selling price higher. The team mentioned on the call they expect growth in all major product lines for 2026. This includes automotive, mobile, PC, enterprise SSD, and boot drive storage. They also detailed how flash makers have all but exited the eMMC market, and they said competition has diminished significantly. The company is seeing strong revenue contribution from this eMMC market as well. And the management team detailed how 2025 marked a turning point for client SSD given the success of the new PCIe 5 controllers. They secured design wins with 4 NAND flash makers, including 2 from South Korea. And they expect to benefit from the higher selling prices and profitability as the new controller enters the mix. There's a newer product being released, which is high-capacity QLC-based storage for SSD. QLC stands for quad-level cell. Again, it's a technology I don't really understand too well, but I'm ramping up on my knowledge here. The important part to know is that they say the QLC-based technology is the largest market for their Mon Titan line, and they remain on track with customers to begin qualification this year for QLC. One direct quote that was really encouraging on the Mon Titan product line. They said, "I'm pleased to announce we have already secured design wins with multiple Tier 1 customers for this new controller." Let's continue looking at some more details from the Q4 2025 earnings report. Another direct quote was, "In 2026, beginning in the first quarter, we expect to continue to reap the reward of our investment in Mon Titan, our 6-nanometer client SSD controller, and our new portfolio of eMMC and UFS products." The CFO on the call detailed the strong revenue growth, which increased 46% year over year and 15% quarter over quarter. They cited continued strength in mobile demand and strong growth in PCIe 5 SSD. Additionally, they said they anticipate full year 2026 operating margins to improve compared to 2025. That's always great to see when a company is saying margins will be increasing. On the competition side, the management team detailed how 2 NAND makers walked away from mobile storage, and they continue to gain market share in this area. The company said we have a very strong backlog and we have a very strong momentum from all product lines. They did mention they may skip some business if the margins do not meet company targets. And it's really their backlog that indicates the sequential growth throughout the entirety of the year. They said boot drive is a really strong business for Silicon Motion, and there's multiple customers, not just Nvidia here. Enterprise controllers will definitely grow much faster, they said. In the PC OEM space, they said it presents a tremendous opportunity. The customers themselves cannot meet their demand there. And there's higher selling prices moving from generations of PCIe 4 to PCIe 5. If you follow this tech or semiconductor space, you might be thinking, isn't PCIe 6 the latest and greatest? And that's true for leading edge AI makers in the enterprise space. But on the PC consumer side, there's still a migration from PCIe version 4 to version 5. We picked up an important detail from this call on PCIe controllers from an analyst. The analyst said you're getting the biggest ASIC program out there as well. I'm guessing that means Google's TPUs product line, or it could potentially be Amazon's Trainium. The company detailed how they're locking up 80 to 90% of the market for boot drive storage. Again, it's really encouraging where it seems like competitors are leaving these niche markets and Silicon Motion is stepping in and gaining market share. Let's continue looking at some more details of this Q4 report. The company mentioned automotive is a big market for Silicon Motion. Yet the automotive sector is the lowest priority for NAND and DRAM makers. And this is why many Tier 1 suppliers come to Silicon Motion from automotive to ask for help. On the boot drive business, the company detailed how it's a much more strategic business, and they may sacrifice some margins to gain additional market share here. They talked on the call how cloud service providers demand much more than the current supply can support. They also mentioned how a leading smartphone maker is having trouble procuring NAND and DDR5 supply. And management talked about how the bottleneck in inference is in the DPU. It's all around the storage, they said. One direct quote was, "We've got to find a way to drive a 5x increase in inference processing time. We're going to do it with a much more NAND-intensive architectures." Later, they discussed how there's a huge amount of momentum for NAND makers to increase capacity. And they talked about how demand is very strong for MonTitan, and that customers all need MonTitan to fill the role. In regards to the Chinese market, the management team said, "Our controllers manage everybody's NAND." On MonTitan usage in the PC market, the related client SSD products are ramping in the second half of the year. Lastly, the management detailed how they expect to see gross margin improvements getting into the back half of the year. This is really encouraging for investors like myself that the company has so much visibility going into the second half of 2026. Now let's look at some details from the UBS Global Technology Conference. This conference was held in December of 2025. They mentioned here how the ferry automotive segment is ramping quickly. There's strong design wins with Toyota, Tesla, BYD, and other auto companies. On the MonTitan product line, there's 2 Tier 1 customers and a total of 6 customers. They have an enterprise boot drive win shipping to Nvidia for their Bluefield 3 product. And they mentioned their strong interest on the boot drive from Google. I believe since this conference, they signed with Google for that boot drive. And that's because the analysts on their latest earnings said you got the largest ASIC maker out there. The company is experienced in the Chinese market, which has different architectures, and they have previous engagements with Alibaba and Baidu. With regards to PCIe Generation 6, they said they'll give development guidance in Q2 of 2026. They said design momentum is much stronger, and I believe this is comparing to Generation 5. They detailed how the silicon for Generation 6 is not available until the second half of 2026, but customers are looking to sign deals now. And Silicon Motion is also in qualification for Bluefield 4 with Nvidia. This adds additional switches for the boot drive. I'm not really sure what switches mean in the context of a boot drive, but that's pretty encouraging there's more of them. The management talked how MonTitan can be attached to Intel or AMD. It's quite flexible. And not only Nvidia has a DPU or a data processing unit, so it seems like there's some upside with AMD or Intel potentially for this product line. On this conference, they detailed how NAND prices went up sharply in the last 3 months. And keep in mind this statement comes from December of 2025. They said it's very hard for the module maker to deal with the current situation on rising prices. On the specific product of NAND controllers for Generation 5 PCIe and 8-channel, they have 4 NAND design maker wins. They did detail how PCI Generation 6 in consumer PCs will only launch the earliest in 2029 or 2030. However, in the enterprise data center space, they're switching to PCIe 6 in late 2026 or early 2027. And Silicon Motion said they're putting more into R&D for Generation 6 because of the much bigger momentum with the design win pipeline. They're investing in enterprise, and they're already seeing a return on investment on the 8-channel PCIe controller already. Let's take a look back at the Q3 2025 earnings. And since this report was from late October of 2025, the information isn't as up to date as the Q4 report. So I'm not going to rehash any of the previous details, but just new things that I learned from this specific report. And 6 months ago, they detailed the increased market share across the product portfolio. They called it a robust design pipeline, and that it benefits from the increased NAND price trend. I was really encouraged to hear they're benefiting from the increased NAND prices. Because since Silicon Motion makes the controller, I wasn't sure if the prices for the controller are going up as well, and this seems to confirm it. They talked about how AI remains a significant growth vector across the memory and storage industry, and they're increasingly seeing NAND flash makers relying on Silicon Motion for completing products. One quote was, "End market demand in the third quarter was higher than expected." And they were expecting to capture significant market share for the top tier of the PC market. There was also significant design win activity in the automotive segment across different products. The company's new micro SD product is winning in multiple locations, they said, including the Nintendo Switch 2. That was the first time I'd seen the Nintendo Switch 2 mentioned before. So you can see how broad and diverse that the different product lines which Silicon Motion plays in. They said, "We have never been in a better position to expand our market share." And they detailed how there's a strong rebound in mobile demand, along with strong growth in PCIe 5 products. The new PCIe 5 products have better gross margins, and that offsets lower margin older products. The MonTitan QLC SSD is near the GPU storage, and there's many new opportunities for MonTitan to fit in, as they call it. Looking ahead for PCIe Generation 6 4nm, they'll be aiming for late 2027 production. Lastly, they said, "We feel very strong for our backlog, and we will benefit from the NAND supply shortage." Let's check out some more details about the Silicon Motion business from their filings. The 20F filing is equivalent for a foreign stock to the 10K. But this report only comes out once a year, and the most recent one is from April 30th of 2025. So Silicon Motion should be releasing their next 20F in a couple of weeks, and we'll see what updates they have there. A lot of times these filings will give some additional details that the company won't typically talk about in their earnings reports or at technology conferences. And some of the things we learned from this most recent filing are that Silicon Motion generally instructs foundries to begin manufacturing on customer forecasts. So they end up incurring inventory and manufacturing costs ahead of revenue generation. These long filings are typically 200 pages, and they include all sorts of different risk factors. Many of these risk factors they talk about are black swan type of events. But there was 2 risks here we thought that were worth talking about. The first is the company's dependence on the PC and smartphone market. That still makes up a large portion of the sales for Silicon Motion, even as they transition to more AI and enterprise-based sales. They also detailed a risk that all major NAND makers have internal captive sources of controllers, they said. And in the past, operating results were impacted when customers chose to insource controllers. However, it's really been in the past year or two that many of these NAND makers are exiting the market, and they're choosing to rely on Silicon Motion instead, who's an expert in the field. In 2024, their filing detailed how sales to the 5 largest customers made up 66% of sales. Sales to customers over 10% of revenue was 57%. This included the 4 names Micron, Kioxia, Phisemi, and Affastor. 98% of sales are technically outside of the US, even though many of the end products end up in the US. 67% of revenue comes from the combination of China, Singapore, and Taiwan. However, 99% of sales are in US dollars, so there's no currency exposure here. The 2024 product breakdown in sales was as follows: 50 to 55% of sales was in SSD controllers, and then 35 to 40% of sales was in eMMC and UFS controllers, and just 5 to 10% of sales was in SSD solutions. They talked in this filing how custom controllers have higher margins, and there's different price and performance trade-offs for the different types of controllers. So basically, the more custom work that Silicon Motion is doing, the more they're able to charge for their products. R&D expenses in 2024 was $218 million, and this made up 27% of total revenue, while sales and marketing was 3.4% of revenue, and G&A was 3.9% of revenue. So you can see how focused this company is on R&D and bringing new products to market. Also, there's not a lot of expenses going into sales and marketing, which is encouraging that a lot of the products may be selling themselves, or the manufacturers know to come to Silicon Motion already. There was 1,819 employees in total from this report, with 1,490 in R&D, and 1,560 of those employees are based in Taiwan. I was impressed in the section of the filing that detailed the board and the credentials the board has from top Ivy League schools. One board member has an MBA from Columbia, another has a dual engineering degree from Cornell, and there was board members with degrees from Berkeley and Stanford. So you can see this is an extremely well-educated board that has a lot of experience working with Western markets. The founder and CEO, Wallace, owns 1.4% of the company. I was actually a bit surprised that the founder didn't have more. But I'm not too familiar with how the early stages of this company went, and they might have had to fundraise to lower the owner's stake in the company. The biggest institutional holder is Fidelity at 6.6%. Now let's preview the upcoming earnings report. Silicon Motion is reporting Q1 2026 earnings on April 28th after hours. It's one of the first hardware companies to report in the season, and SanDisk reports the day after. The company guided Q1 revenue from $292 to $306 million, which would be up 83% year over year at the top end of the range, and up 10% quarter over quarter. And this is keeping in mind, as we mentioned, that previous Q4 to Q1s saw sequential declines in revenue. But they did sound pretty confident they've overcome that seasonality in their business. I took a look at what analysts expect, and they think revenue will come in at $300 million on average. One curious thing from analysts is they expect $1.10 of GAAP earnings per share in Q1. This is versus the $1.41 of GAAP EPS that Silicon Motion got in Q4 of 2025. So it doesn't really make sense to me there'd be a higher revenue number and the company would get significantly less earnings. So we'll definitely want to track where that GAAP EPS lands to see if there's something we're missing or if the analysts are just completely off here. And for Q2 of 2026, analysts have penciled in $307 million of revenue, which also seems pretty low to us. Before a company reports earnings, I like to make my own estimates of where I want to see the revenue numbers and profitability land. This gives an objective barometer to know if the company really outperformed my own expectations or not. I would like to see at least $320 million of revenue in Q1. That would be a pretty strong overperformance and give me a lot of confidence moving forward with this company. We'd probably be okay with $315 million of revenue as well, depending on what other metrics they report and how the narrative sounds. I'd also like to see guidance in Q2 of $325 to $335 million. This would also force the analysts to have to update their models significantly for Silicon Motion. On that GAAP EPS metric I mentioned, for Q1, I'd like to see greater than $1.50 per share. I'm just not buying that the company's going to get higher revenue and then be getting less profitability. So fingers crossed this company does well on their next earnings report. And we'll have the earnings coverage on this company in our next monthly summary after the end of April. Let's check out some bear cases and potential concerns for Silicon Motion. It's always good to think about what could go wrong with a company as well. And one thing I noticed when researching this company is that in 2022, they actually had higher revenue than in 2024. The explanation that I found is that remote work during the pandemic drove massive PC upgrade cycles, and these laptops or PCs were packed with SSD memory. Also, smartphones saw significant upgrade cycles during lockdowns. During this time, Silicon Motion's customers panic hoarded inventory. This led to a massive 2023 inventory glut. And still in 2024, they were ramping up the enterprise data center sales. And the company's share in what we would call AI sales was still pretty tiny at that point. Keeping in mind their deal with Nvidia came in Q2 of 2025. One big concern we have for Silicon Motion is the supply chain could still be a risk. This isn't really specific to Silicon Motion itself, but a big supply chain disruption could massively disrupt this business. Additionally, one yellow flag for us is that the company is technically incorporated in the Cayman Islands. But this has become more commonplace in recent years, with many companies from Asia looking for the multi-jurisdiction of the Cayman Islands. So that will always be a kind of permanent question mark for this business. One additional concern I had is through my broker when I tried to place a trade through Schwab. And when I was attempting to buy the stock, it said I needed to call in to place the trade. I've actually seen this a bunch of times recently with Schwab. And for a lot of ADRs or smaller issues, they have them on this somewhat restricted list. Although you can still sell through the app or the web, it's just the buying part that you have to call in. This is now the third time I've had this happen with Schwab where they made me call in to buy a stock. And it's been really frustrating working with them because they won't explain why the restriction is in place for any given stock. The entire list of why they may restrict purchases through the web is very broad as well. It includes things like higher volatility or swings in prices. And I do think Schwab doing this has some artificial demand suppression to the stock. This is because some investors may just avoid buying the stock if they need to call in. However, E-Trade had no such restriction on the name for buying Silicon Motion, and I'm increasingly preferring E-Trade as my broker, as E-Trade also gets better price execution than Schwab when submitting a market order. Let's discuss our final thoughts regarding Silicon Motion. The company is a high-growth semiconductor with a very reasonable stock price, and the name has not seen the same run-up in stock price versus others in the industry. The company has strong profitability, and they're generating enough cash to pay a dividend. Other NAND memory makers are exiting the controller market, and this gives Silicon Motion even more leverage. The company has some top-tier customers including Nvidia, Micron, and SK Hynix. There's a strong diversity of product lines and an innovation engine through their R&D organization. And Silicon Motion's product lineup is now becoming vital to Nvidia's data processing units. The strategic alliance with Nvidia indicates this company will be a beneficiary of next-generation AI. Additionally, automotive is an emerging segment that is low priority for other NAND makers. Our position size in Silicon Motion is currently around 4%, but I'm also considering adding prior to the earnings report as I believe the company will outperform on their earnings. This concludes the video, and feedback is always welcome in the comments section. Also, feel free to challenge any of the points presented here, as we all benefit from hearing bear cases for a potential investment. I'll be covering the earnings report coming up at the end of April in our next monthly summary. And as a last reminder, this is not investment advice or recommendations to buy any stocks. Thank you for taking the time to listen.